Hey guys, welcome back to my channel. I am so excited with you because I'm about to share with you guys something that literally changed my life. And it was when I learned the Fibonacci tool. The Fibonacci tool is found all throughout the world in different areas. Like, I guess if you divide your face in half and divide it by the width, whatever. It's all throughout the world. And the golden ratio is called the 618. So, what I'm about to show you is how humans use patterns in the market to literally be able to profit from this. Okay, so let's go ahead and get started. Before we get started, make sure you are to follow me on Instagram at asia.shanae. I do have my Instagram link, my Discord link to my community for mentorship in the description, as well as my email. If you're looking for a private mentorship within my community, make sure that you send me an email. And I also have my Telegram group as well. Okay. So, what is Fibs? Okay. Fib is a tool that we use to determine when the market is going to retrace. So first, what is retracement? The market moves in three ways: up, down, and sideways, okay? In order to confirm that a trade will continue in that direction, we need to have a pullback, okay? So what happens? We have our impulse, we have a flag, and we have continuation in the market, okay? Now, a lot of traders struggle with where the market will pull back to. So they find themselves jumping into a trade here, and then the market pulls back in the opposite direction. They lose the trade. Then they think it's going to be a buy, so they jump into a trade here, and the market drops down. A lot of you probably have experienced that if you're a new trader. Well, one thing that you want to look at is this tool. Now, first, I'm going to tell you how to set the tool up. Okay, so I'm going to just go to my settings here. And the only ones that you want to have highlighted are going to be the 0, 0.5, 618, which is our golden ratio, 786, and 1. I always extend my lines to the right or the left. It doesn't really matter. And I keep my trend line. If your background is black, I have my trend line be white, solid line, and vice versa. Okay. Now, I'm going to click OK. Now, how do we use it? Just like I drew these trend lines here, guys, I'm going to draw the trend line with the Fibs tool. How do you know if you're in an uptrend or downtrend? One indicator that I keep on my screen is going to be the 200 moving average, okay? When price is above the 200 moving average, you are overall in an uptrend. And when price is below the 200 moving average, you are overall in a downtrend. Look here, price is below that 200, we are in this downtrend. Now, when I use this Fibonacci tool and I take the Fibonacci from the top all the way to the bottom, what I noticed here is, and I'll go ahead and I will make this bigger so you guys can see. And I just drew my trend line the exact same way I had the yellow line. I just drew it with the Fibs tool. What you notice is that price pulls back at minimum to the 50, but in most cases throughout the world, throughout history, throughout everything, human anatomy, throughout biology, you look at flowers, all the same thing. Okay, basically how it works is like 1 + 1 = 3, 3 + 5 = 8. It's like a sequence of numbers. Okay, but we don't have to worry about that. We don't need to know the math of it. Thank you for figuring this out, but we don't need to know that now. All we need to know is that when we draw this impulse and we see price begin to pull back, that's when we can begin to use the Fibs tool. Price typically will pull back to the 50 or our golden ratio, which is the 618. What does that mean? It means that once price pulls back, and as long as it's staying within our trend line, which is below this 200 EMA, we're able to get into the trade. Once it pulls back to that zone, we can get into our trade and write it down. Now, when price only pulls back to this 50 level, I set my stop loss at the 618. What does that mean? I'm getting into my trade. My stop loss is here at the 618, 30 pip stop loss. I'm collecting 30 pip stop loss for a risk to reward ratio of 472 pips. That's a phenomenal risk to reward ratio. Ideally, when price pulls back to the 618, your stop loss is at the 786. And this happens on every time frame, okay? But let's look at the next impulse that happens in the market right here. Let's use our Fibonacci tool to draw this out. We have this impulse happening in the market. If I want to catch the trend, I can't just jump into the market anywhere. I have to wait for that pullback to confirm that price will continue to move in that direction. What happens? We got this impulse happen here. We get our pullback and what? Guess what, guys? Guess what? It's pulling back to the 618. And then what happens? Price continues to move in that direction. Literally this week, we took a trade on gold. I'll go to it. Did not get into the trade at the initial impulse. So I had to get my team into where we could get it. We ended up catching 900 pips from this trade. But how did we get into this market? We had the impulse, we had the flag, we had the continuation, we had the flag, we had the continuation, we had the flag, we had the continuation. Okay, notice price is staying below the 200 EMA. So let's draw our fibs tool here. And what do we see, guys? What do we see? Price pull back to the 50 and we get a continuation. Now, like I told you guys where the stop loss should be, right? If it pulls back to the 50, your stop loss is going to be, see here, at the 618. Now, when do you get out of the trade? It's 146 pips because we're on the 4-hour. Potential to catch 946 pips, which is a great risk to reward ratio, okay? But one thing that I tell people to get out of trade is get out your first TP or take TPs along the way up until the 0 line, 674 pips. Literally, this line here can be guided as your first take profit zone. Let's look again to see if this stays consistent throughout the trade. Delete these lines for us. And let's look here. This one pulls back almost to where our stop loss would be, which is a 786, but it doesn't. And then we get our drop down. Let's see the next one. Pulls back to the 618. Stop loss would have been at the 786. And then we get our drop down. It happens on every time frame. So I know you guys are looking at, whoa, this stop loss is hecka high. I know stop loss is 130 pips for the potential for you to catch, over 1,000 pips. Literally, guys, if you look here at our group, I'm going to show you guys our community. If you look here at our community, guys, you will see in our signals chat. First of all, these are some of the trades that we called. So UCAD, we hit a stop loss on GA, but UCAD moved exactly where you wanted it to go. Where is that gold trade? Bitcoin went crazy. It hit 8,600 pips. Gold, TP1 hit, TP2 hit, TP3 hit, TP4 hit. Guys, these were some of the signals from this week. GU, silver, US 30 from our live session. We have over here, this was our gold signal. We had Bitcoin, 8,400 pips. We have UCAD. Like I said, we only had one stop loss hit, and that was on GA this week. GA broke past our zone, so we missed it. So we didn't get that GA move. However, from the signals that we did take, we caught over 20,000 pips, guys. 20,000 pips. Just from leveraging the same system that I'm showing you right now. That's how easy this is. Once you understand how to use the Fibonacci, guys, you're going to be golden. You're going to be golden. You just have to know how to use it. And that's exactly what I'm teaching you all right now, is how to use the Fibonacci tool. Here's another example. We have, I already have my fibs on here because, like I said, I use it for everything. So in this example here, when I zoom in, what do you see? Impulse here in the market, pull back to the 50, which is right here, and then you get your continuation down. What happens again on this continuation? Pulls back to the 618, and we're looking for a continuation down. Where's our zero line? Down to about 44,000. And the funny thing is, Steve looks at it the exact same way. Stevenson is our 7-figure trader and mentor in our group. We drop his charts in here every single Sunday and Tuesday. Look at his chart markup for Bitcoin. He has price pulling back here, dropping down to 44,000. That's crazy. That's how we're trading here in the market, guys. Fibonacci is very easy to use. It's very resourceful. You just need to know how to use it. So he literally had the sell coming over here to 51. Guys, I don't know if you guys look at this. Look at this. Hold on, I have to point this out to you guys because people think we're capped. So I'm going to show you guys exactly. 51,561. Watch for sale here. 51,561. Guys, this was on February the 23rd. What is today? Today is the 27th of February. Today's the 27th of February. Guys, if you would have sold at 51.6, where we said to sell, 51.6, 51.56 right here, you would have not only caught over 7,000 pips, but right now you'll currently be up 4,000. So if you really want true mentorship, you really want to learn how we're able to catch 20,000 pips. We're doing it by using the Fibonacci tool. We're doing it by leveraging the leaders within our community. Let's go ahead and get you plugged in so we can get you paid, guys. So if you have any questions, again, my email address is in the description. Feel free to leave a comment, like, share, subscribe. And you can also add our Telegram group as well. But we've been killing it, and we hope to see you all on the other side. As always, see at the top because the bottom is too crowded, but we would never look down unless it's to pull you up.